Hi, everyone. Welcome to Payments TV. My name is John Gaffney. I'm Chief Content Officer here. Our topic today is moving core modernization from a tech priority to a business priority. It's a subtle difference, but it's very, very important. And I'm looking forward to the conversation today. The imperative to align core banking modernization with tangible business outcomes is really based in emphasizing that infrastructure upgrades have to solve customer pain points to justify investments. And here today, you're going to learn how composable banking architecture built on modular API first design and cloud native orchestration enables banks to decouple innovation from legacy constraints. You'll also learn how embedded finance reduces time to market for new products, reduces client onboarding friction, and increases payment processing growth. And I'd like to welcome two guests for our conversation today. First, Michael Haney is Galileo's head of product strategy. Michael, thanks for joining us.
Thanks for having me, John.
And we're excited to welcome Dan Williams, Senior Vice President of Embedded Banking at KeyBank. Dan, thanks for joining us.
Thank you, John. Looking forward to it.
Dan, we're going to start with you. So, we think a lot about internal pressures when we talk about composable banking architecture or just a general topic of banking architecture. But there are external pressures as well, aren't there? I mean, what's going on in the consumer and business client world that makes this conversation relevant?
No, I think it's incredibly relevant, John. There's a tendency within financial services to think about our legacy architectures, our cores, and we talk a lot about internal systems. But I think what's more important for us is to just talk about how the world's changing and start to think outside in. I think us as consumers, I would say the first major force is just technological advancement. We're seeing the rate at which technology changes impacting us as individuals, impacting our customers, impacting how they serve their end constituents. And just the rate of that just continues to advance, and that has huge implications. One of those being how financial services are distributed. So a lot of times when we think about our delivery of payment products, depository products, you're continuing to see them intertwined with the technology with which our customers use. So their primary operating platforms, their ERPs. If you're a consumer, some affinity-based experience on your phone. If you're a small business, it could be some point of sale provider. And some of these fintechs are massive. And if you just kind of look at that and you think about and you compare it to 20 years ago or 10 years ago, or with the rate things are changing even 5 years ago, you just continue to see a future where how our services are going to be distributed evolves. And when you realize how prevalent technology is in consumer choice and how they make payments, how they select things, you realize that the technology strategy and your business strategy are hugely intertwined.
Michael, is that consistent with your experience at Galileo?
100%. I chose three things to kind of highlight. The first is this ever-increasing move to real time. So we're increasingly living in this world where we expect things to happen instantly, right? We push a button and there's a movie on my TV screen, or my goods are delivered within the hour, or I push a button and a car is ready to go in 15 minutes to take me to the airport. To kind of translate that into financial services, right? The younger generation, unlike myself, didn't grow up with physical cash checks and waiting for payments to happen over multiple business days. They're used to a world, again, where things happen instantly, so their money better move instantly. And there's a reason why they've all adopted apps like Venmo and Cash App. And it spreads into the business world and the employee world too, right? Gig economy workers expect to get paid after every job that they do. Insights is another one, right? We live in a data-centric world now. People want to be nudged with notifications as things are happening. They want to see trends like their spending trends and their progress on their investments as they reach their financial goals. And it's not limited to consumers, right? This behavior, carries over into to business customers as well. They want to know instantly what their cash position is and their cash flow analytics and payment calendars and so on. And the last one I'll highlight is this world of we're moving out of this world where financial services exists in these silos, right? This is a deposit product, this is a lending product, this is a payment product, and so on. They want to blend the best of all of these. Early wage access and buy now, pay later are becoming kind of table stakes now, where we combine the best of all of those attributes, and hopefully we'll get the regulators to continue to move along with us. But I think they also sort of forget, right, that credit card was one of the first examples of blending a lot of these types of financial services into a single offering. And, small businesses are the same, right? They want their financial services to be where they want them to be, embedded, as Dan was alluding to, embedded into ERP systems and HCM systems and even project management systems. So these new capabilities and new ways of distributing are fundamental to what's happening out there.
Yeah, I was just going to reiterate something that Michael had said there, and absolutely that kind of right now world. And it's not just like right now to move money; it's also as needed to get information. We see that have big implications to downstream fundamental legacy systems that were built with batch in mind, and navigating that is a very real challenge.
Interesting. So, Michael, let's come back to you. Your work at Galileo involves helping banks respond to competitive threats, either from neobanks or from big tech companies. What are some of the architectural changes that you think are most critical for legacy institutions as they face this pressure?
Yeah, you bring up a great point. Galileo, we began life helping out the fintechs or neobanks, as they're sometimes called, who have a completely different mindset and have had no legacy systems, no legacy architecture to deal with. And that kind of informed us as we pivoted to go after the more traditional incumbent or legacy banks, as they're sometimes called, that want to help, want to start playing with some of these technologies, but also starting to think about modernizing their legacy infrastructure. So this really helped us to inform what should the architecture look like, and what are some of the almost prerequisites that you need before you can even start adopting some of these newer applications, which are all cloud-based and API first and so on. Again, I'll pick three things. The first is what and I'm probably dating myself here, what I'll call middleware, right? The way we integrate systems together, both internal to the bank and outside of the bank, which is becoming even more important, is external integration. So we can tap into a wider ecosystem of clients and partners, and the way to orchestrate journeys across these. So having a modern API management layer is something that we often see happen prior to adopting a new digital banking platform or core banking platform or payments hub or whatever it might be. And of course, the new sort of middleware that's rapidly emerging is what we call an event streaming architecture. I would say that one requires a different mindset shift as well, of how do systems and people react to events that happen, rather than trying to proactively think about how to orchestrate business processes and journeys, because we'll probably never be able to predict every business process and journey that's out there. So event streaming is becoming a popular form of middleware. The second, of course, is cloud. Nobody wants to be in the game of building and operating a physical data center structure filled with hardware of all different types. The cloud providers allow us to remove some of that burden away from the bank, so they can focus on their customers and the act of banking itself. And get out of the business of infrastructure management, and the way that these kind of cloud providers help you to have consumption-based models, right? That helps you move from more of a CapEx to an OpEx sort of mindset. And last thing, just like we talked about in the previous question, data. It's all about data. How easily can I get at the data to have insights and analytics for my staff, for my management, and of course for my end customers? A lot of the legacy architectures didn't have a data first mindset, and which is very hard to get data moving in and out. So that's why we see chief data officers arising, especially at the large banks, data governance, data standards, all this focus on data.
Interesting. So, Dan, I always, when I first heard the term embedded finance, I was like, okay, well, how does this work? And then you start to see all these consumer facing, like, automatic loan things happening. But there's a commercial angle to this too, isn't there? I mean, how can embedded finance address commercial clients' ERP integration needs? And go back to inside outside argument again. How are supply chain digitization trends and vertical SaaS platforms reshape your API priorities?
When I think about like the evolution of this, and I'll date myself similar to Mike did with middleware. Like I can remember back when we would think of, we'd be looking at a report and it's are we as a bank judge to be easy to do business with? And back then that meant, who were your people? What was your RM? What was your credit policy? And if I look now, how easy to do business with is fundamentally, are our payment services and applications where our clients want to consume them? And are they fundamentally interoperable with those points of consumption at the moment they want to do it? So you start to think, you think about something like an ERP system, so your primary accounting, ultimately everything we do in financial services is fundamentally part in the business side of some broader business workflow. There is something that happened before the payment that the business did to decide to originate it. There's something that happens post-payment within their business to reconcile it. And the closer you couple your financial system, that metadata, the data around it, to that moment, and keep them from sort of being disassociated and having someone manually try to connect it back, the cleaner that workflow works. And you genuinely see commercial organizations who are, again, also trying to adapt. They're trying to adapt and evolve and modernize their own infrastructure, and they're trying to modernize how they service their customer base. So when you meet them within those workflows, what you do is it's kind of the next future technology-driven version of being easy to do business with.
So, Michael, I would have to think that that's a pretty close approximation to exactly what you were saying in the question before.
Yeah, 100% agree. I think the key phrase there is being there at the customer point of need, and does your technology stack support that? Because increasingly, whether it's a consumer or a business, they don't necessarily want to just engage through the bank-owned and operated channels. They're going to want to engage through all these distribution points. And so that embedded finance that Dan is talking about, and I'm using the word finance broadly, right? It could be payments, it could be lending, it could be any type of financial services, really needs to be where customers want them to be, and at not just a place, but also a time, right? Imagine a lot of us sitting on our mobile phones, for example, in bed at 5 a.m. and taking care of business, right? We don't have to wait until the branch opens at 9 anymore.
Yeah, I'll add, Mike, that there's just kind of one last point there. Sorry, John. You actually think about that commercial use case and you think about that moment. Like there's a tendency within financial services to niche the investment in their infrastructure and core around a fintech use case. But even if you go to large corporates, even if you go to small businesses, even in that scenario, we want our technology to be close to what they use every day. So it's not niched into just, kind of what hits the press. It's fundamental to how wholesale banking is done.
So, Michael, one of the things that fascinates me here is that this used to be a rip and replace mission, right? But now we have modular upgrades. Now we have composable banking. Now we have continuous improvement. How would you counsel banks that are looking to sequence their infrastructure investments about how to position themselves for some quick revenue plays as well as long-term growth?
Yeah, I think, well, first of all, modernization isn't limited to any one of these back-end or even the front-end systems. So it could be a core banking system, it could be a payments hub, it could be a card processing platform, and so on. Most banks are dealing in any of those areas with 30-year-old mainframe-based systems that the larger banks themselves are hosting. So these approaches that I'll describe are kind of applicable to almost any of these. The first one is what we call the greenfield approach. You could be launching simply a new product line. You might be a bank that wants to get into buy now, pay later, and so you have this product tech stack that does simply that one particular service, all the way to extremes where we see banks launching what we call digital sidecars, right? They might be standing up a digital only or direct bank, sometimes with a different brand, often with a mission to reach out to customers outside their branch network, or to go after segments that they hadn't previously gone after. And they're playing with a much larger piece of the tech stack, and often letting themselves get familiar with that, with the ambition, although the ambition doesn't always realize itself, to let that tech stack cannibalize their legacy infrastructure. Or even examples, the business line that Dan represents, right? How do I start to get into this game of banking as a service so that I can embed myself into other platforms and other journeys for other brands, not just for consumer-oriented fintechs, but all the journeys that Dan was describing. So this is another place where you can kind of isolate a new infrastructure and get comfortable with it before you start attacking the mothership legacy infrastructure. But we still see a lot of banks who, quite frankly, aren't interested in any of those greenfield approaches. And for that, we do recommend a iterative and progressive style approach, right? How do I slowly eat away at the legacy infrastructure? And you can divide the world in so many ways, by geography, by product line, by customer segment. There's a lot of ways people define iterative and progressive, but we always recommend try to do it within one budgeting cycle. Try to show business value at the end of each phase so you earn the right to do the next phase. Long gone are the days where we have 5-year transformation programs and you don't see business value until the very end. And also throughout this thing, you should be adopting this, what techies will call the CI/CD mindset, that concept of continuous innovation, continuous delivery, continuous integration, some people define it as, so that we start thinking that this is a journey that should never end. There is no project end. We now have a different way of looking at operating and running our business, which is a continuous adapting of our bank to the ever-changing needs of our customers and the ecosystem around that.
Dan, how does this all affect the customer experience from what you know on the consumer side, as well as your side on the commercial side?
When I thought what was really interesting with Michael's answer there was that whole shifting to a continuous improvement model. I've been in payments for a long time. I've been in large organizations and fintechs, and part of this is a operating model change to ultimately get to a point where it's like, okay, we've designed ourselves and kind of got away from thinking about particular payment types and particular payment systems, and we start to think about customer experiences and what's it like to be a customer of the bank who's onboarding, what's it like to be a customer of the bank who's servicing, what's it like to be a customer of the bank who's reconciling. And when you think about being able to deliver discrete benefits in those functions or experiences, and you think about how do I get my architecture to evolve to something where, yeah, it can do that and I can sort of continuously develop it and expand it. The ultimate impact to the customer experience is you're current and you're constantly improving and adapting. And I think that's the operating step we need to all make, because again, as soon as you sort of stop, it gets harder because now you're becoming more outdated, and then you're left with a bigger thing, and then there's another budgeting cycle, and is this the project that makes it this year or is it next year's? That's the default. That's where we're sitting. And unless you can evolve your technology stack to one where you can kind of keep pace with change, you're going to be in that loop. And the only way you keep pace with change is how you approach your tech stack and how you approach your operating model. And when you keep pace with change, you can ultimately continue to adapt your customer experience and your customer acquisition and your business in order to kind of continue to take market share.
So, Michael, there's a lot of change we're talking about here, and change is never easy for a bank or a business or you know, a consumer for that matter. But I kind of call this question Galileo's greatest hits. But what are some of the infrastructure components you think are most vital for maintaining trust as all this change goes on?
Yeah, I thought about this in the context of the customer experience, and it's often easier for us to talk about consumer rather than corporate type of experiences. But the ultimate goal, right, that banks have been now talking about for a decade and trying to achieve is this concept of personalization, highly personalized banking experiences. And they always come back to these simple phrases, which actually I kind of like because it constantly keeps you grounded. Like, does my bank know me? Is my bank empowering me? Is my bank, able to reach me, and so on and so forth. I would add to this ever-growing list is my bank protecting me because, a lot of what banking started at was a safe place to put your money, right?
Yeah.
Even though back then it was in a physical iron, safe or vault. But even a digital money needs to be protected in an era of cyber fraud and so on. So again, I think that some of the technology that's finally coming along is starting to enable this. We talked a little bit about event streaming and how that can help us to think differently, have a different sort of operating model and a different sort of enterprise architecture. So that we are capturing and processing data in real time and reacting to it in a way that sort of delights and surprises the customer at the end of the day, and can also make that sort of banking feel far more personalized than what it is today. But again, even that event stream needs to have easy access to the data and the systems that are subscribing to the event stream and publishing to the event stream. Again, it's all about, is that data easy to get into and out of, which starts to bring up all kinds of questions around what's my bank's data governance framework, what's my data's level of data quality. But then just to go back to the protect me one, right? There's nothing hotter, of course, than the wide variety of cybersecurity and anti-fraud and so on types of measures that we take. So there's all kinds of now systems that you can get that are more out of the box around consent management and identity and access management and encryption technology and so forth. So we can't forget the original mission of banking, which is to protect my clients' money.
It's a balancing scenario, and I think Michael made a strong case for kind of both sides of the coin, so to speak. On one side, we want to serve our customers in as easy and convenient as a way as possible. On the other side, we have to sustain a very secure, trusted environment that sometimes introduces friction. And I think when you get into the risk management, there can also be a tendency to view technology and change as a problem with, it's introducing risk. But again, technology in these environments, these are just tools, and they can be applied as much to mitigating risk as they do to growing revenue. And mitigating risk and kind of growing a business, like those go hand in hand within financial services.
So KeyBank is known as one of the most innovative banks and certainly one of the most progressive in the area that we're talking about right now. And my understanding is that you've practiced what you preach recently, that your SME clients are accessing their balance forecasting via ERP plugins rather than a portal. Any behavior shifts that you've seen as that change took effect?
Yeah, I mean, it's interesting. You will see in general, like our approach is one of like, here's a tool set. Here's a tool set to have a great customer integration experience and run your business the way you want to, whether that's within ERP or whether or not it's through a traditional bank portal, whether it's through a modern developer experience, whether it's through a traditional file. And we ultimately see clients use more than one of those tools. It's usually not a one or the other. For clients that do engage digitally using ERP, yeah, you see uplift in payments, you see and the types of things we'll measure customer acquisition, what's the rate at which clients are choosing some of the newer integration methods, behavior. Retention is a little less borne out because some of this stuff is newer, but I think intuitively we'd all agree to the extent that your services are ingrained with how a client runs their day-to-day business, that's better for long-term retention as well.
Interesting. So, Michael, I'm very intrigued by this concept of continuous evolution and constant upgrade. Is that how most of your customers are looking at infrastructure right now? I mean, what happened to the concept of future proofing?
Yeah, quickly, just a quick point on Dan's last comment there, which also applies to this question, which is measure, measure, measure. Those KPIs, those key metrics are so important. It's hard to know if you're doing well and your clients are doing well if you're not measuring it. So I love that last couple of sentences there. But yes, so first of all, this concept of continuous innovation and evolution is definitely there for any type of organization, I think, which is newer generation, right? So I talked about how Galileo works with both traditional financial institutions as well as the so-called fintechs or neobanks. Anything that's newer definitely has kind of come out of the ground with the CI/CD mindset right away. And so we definitely see that tied to the culture of these types of firms. And it shows in the product velocity. Now, have they reached the level of product diversity and complexity that large banks like KeyBank have reached? Probably not yet, but the rate at which they're able to change and launch new capabilities and new product lines or even new countries is phenomenal. We do see parts of larger legacy banks that have adopted this mindset, but maybe not holistically permeated throughout the bank. And I will say that this is, I'm a reformed banker, for lack of a better word. And so I will say that there was about a 10-year period in my career, roughly 2005 to 2015, where banks and the consultants that advised them really, proposed this concept of two-speed architectures, where it was invest all your effort, time, and money in the front end, right? These are your digital self-service channels like web and mobile. It's okay that your back end is still living in 1965 and it's mainframe and they use waterfall methodologies and different sort of budgeting cycles and so on. The problem is they hit a wall, which is, okay, I've made all the advancements and changes I could on the front end. Now I want to launch a new product, for example. Now I need my back end to come along in this journey with me. Oh gosh, they don't work with the same methodologies or at the same speed or even the same mindset that my front end team does. So we saw these pockets of the bank that were rapidly moving to look more like the neobanks, but not the full bank. And I think that's a big change we're seeing in the last 10 years, which is even the back end now has to modernize not just the tech stack, but the way of working and the mindset around continuous innovation.
Dan, is future-proofing dead when it comes to the banking infrastructure?
I kind of think even the term future-proofing is a little bit silly. Like, what is a single thing we do now that somehow means we don't have to change in the future? Like,
okay, we can kill it.
It's a buzzword that caught on, but it's a misnomer. Like, I think the more important principle of future-proofing is putting your business in a position where you can improve and adapt over time. Mm-hmm. And yeah, but there's nothing I do today is future proof. It's all going to change. It's all going to move on. It's just whether or not I am leading or following.
Interesting. So, Michael, last question for you. I found a survey that said that 60% of bankers citing fintechs as existential threats say that composable banking has shifted from strategic to table stakes. That's got to be good for you, but do you agree with it?
Well, I don't know if these are, correlated or one is causing the other. I will say that, the concept of nimbleness, the concept of composability, these things that we've been talking about on this call are often, also not necessarily technology related. They're also just how do I run an operate my company. Those are definitely table stakes. Will the fintechs, are they existential threats? I don't know, because there's so much more to this than just having a mobile app which is superior than what you can get from traditional banks. Or it's got, one of the things that the fintechs are looking at beyond technology, right, is fee transparency and customer service and other types of things that go above and beyond just the technology and how I manage and deploy that technology. But I do agree that the art of mix and matching capabilities, as we talked about, the creating new products that we didn't envision before, all of these things are sort of table stakes. But will the fintechs ultimately beat out the traditional banks? That still remains to be seen, particularly in the U.S. market, where there is this sort of regulatory moat, right? Banks are the only things that can capture deposits, and banks are the only type of company that often can join certain payment rails. So that will be, that'll be actually something interesting to watch, especially over the next 4 years. Is, are we going to open up the playing field to non what we call in the U.S. A bank, a deposit taking institution? So yeah. It's a roundabout way to answer your question, but I don't know if the fintechs are positioned to win, but I do agree that all companies, whether you're fintechs or banks, have to have that nimbleness and that continuous innovation mindset.
And that agility and nimbleness depends in part on composable banking. Would you agree?
100%.
Okay.
Oh, that's right. Yeah.
Yeah, that was an easy one.
Yeah, I think a little bit of it is there. I think we oversimplify when we kind of break it into winner or loser, bank versus fintech. I think the reality is, like, we have a ton of amazing relationships with fintechs, and they can be customers that we power, they can be distribution channels, they can be technology that we augment our core services with. I think it's just ultimately, no matter what, it's a world where we're going to continue to coexist as payment experiences become more specialized.
Yeah, interesting. So Dan, you get the last question. You guys have been so innovative, but you had to have looked at what happens if you don't. So what are some of the short-term implications would you counsel a competitive bank or even a colleague as to what they're risking by not innovating in this area?
I've been in this space for a while, and I've ultimately found kind of different ways of communicating that may or may not resonate. And I think if you're really looking with kind of bank leadership, the biggest concepts they need to grasp on is fundamentally, this is about distribution and customer growth. And if you're living in the wallet share, like we lend money and we get a piece of the treasurer's wallet share, that's fundamentally a grow with the macro economy, maybe compress a little bit, total market. And if you look at payment services delivered through technology integrations, all the CAGRs on those are double digit year after year, borne out in example after example. So it really comes down to, like, if you want to continue to grow at peer average or outpace, you need to augment your traditional enterprise with investment that meets these trends. And if you don't, you just sort of marginalize yourself a little bit.
Okay.
The other thing I will say is, from an industry perspective, there's a lot of people that consider this, it's a strategic problem. We need a strategy. This is not a strategic problem. This is an execution problem. Right?
Wow.
Everyone's reading from the same cheat sheet around how the world's changing. It's just whether or not you can execute that. And executing, that means the talent, the strategy, the partners, the priority, the operating model. We're 3 years into it, and our strategy hasn't changed. Where we've learned is execution. And if I were to consult anybody, you kind of got to get into it to learn how to do it right.
Wow, that's great. That's excellent stuff. Michael, anything? Take us out.
Yeah, I love both of those. One is if you're not embedding yourself where your customers need you to be, are you limiting yourself? And two, execution is the only way to make strategy real. So those are fantastic. So yes, I think it's all about again having that open mind to think differently and embracing what's to come rather than doing what a lot of banks are doing and viewing it as risky and avoiding it. So.
All right, so that's going to do it for this episode of Payments TV. Our topic has been moving core modernization for banking infrastructure from a tech priority to a business priority. My guests have been Michael Haney, Galileo's head of product strategy. Michael, thanks for joining us.
Thank you for having me.
And Dan Williams, senior vice president of embedded banking at KeyBank.
Thank you, John.